Now if we go over to company specific, we'll start at the top. So you're talking about Walmart and Target. Obviously Walmart's the biggest retailer in the US. I believe Target's number 3. And we think there's an interesting, we're at kind of a watershed moment here for these two as a competitive dynamics kind of pick up. So you've obviously seen Walmart make some headline news with their $3.3 billion acquisition of Jet.com. But if we kind of pull back the curtain and look at what these companies are doing relative to each other, I think you can understand kind of the cause and effect of the numbers that we saw printed over the past 2 days, and then what that means going forward. So when you look at this is just SG&A per square foot for Walmart and Target, and this is Walmart, just their US business. So what you can see is kind of when Cornell started, who is the CEO of Target, when he started back in 2Q of 14, you started to see this spread between Walmart and Target open up. So basically, Walmart went from, what you saw is Target outspending Walmart, and then you see this big ramp up by Walmart. And a lot of that is due to investments that Walmart's making in people, in their stores, and on the e-commerce side. And then you have Target, which is underspending and trying to maintain costs into a pretty tough competitive environment. So we have the cause here, and how that plays out is in the effect, which is the next chart. And this is just a breakdown in traffic between Target and Walmart. And what you can see is the biggest spread open up between the two over the past 5 years, other than the data breach back in 4Q of 2013. And what we think this means is, one, you have Walmart investing, opening up their pockets for the first time in a decade, and Target sitting on the sidelines, and that's manifested in these traffic trends. So if we flip it over to the next chart, which I think is very telling, what you see is Target losing market share for the first time outside of a data breach or kind of a consumer shock event for the first time in the better part of 5 years. So the key part here is, one, Target's not investing in its growth. Two, I think Walmart is eating their lunch. And three, you're just starting to see this play out. So I think this has a longer tailed call. And then if we add one more element to it, and I'm sorry to sit on Target and Walmart for so long, but if we add another element to it, you look at Amazon and what they're doing. So this chart looks at the incremental retail sales growth on a trailing 12-month basis reported by the government. And this excludes things like auto, food, and gas. So it's just really consumer outlays and things that are pertaining to Walmart, Target, and Amazon. So this is the opposite of what you saw in the chart before, which is Target losing share. And this is Amazon. So you look at the percent of total retail dollars that they're taking, and it's 25%. Compare that to a year ago where it was somewhere in the range of 13%. And we think that between Walmart and Amazon, Target's in a very tough spot. So all said and done, we get to an earnings number somewhere in the range of $4.50 versus Street close to $6. And you throw kind of a low double-digit multiple on that, and you get to 20-25% downside from current levels.